Hooty hoo, all my stock market gamblers. Welcome today. It's Tuesday, the day before the Fed day. We're going to get the Fed announcement tomorrow. Now, what do we got going on in the stock market today? Stock market is up. We're having a big up day, up 400 points on the Dow, up 200 points on the NASDAQ. Now, do I think we've hit the bottom yet in the stock market? We're close, but no, I'm not convinced we've hit the bottom. I would like to see a capitulation day where it just, looks like the end of the world is coming and everything gets sucked down. That will be the day to buy. You can nibble on it here. We're very close to a bottom. I still think we're going to get below 4,000 on the S&P 500. And, I wasn't expecting an up day today. I actually thought we'd have a down day with the Fed day tomorrow. Now, that makes me a little bit nervous because we're having such a big up day tomorrow. Maybe the Federal Reserve comes out and announces something the market doesn't like. Now, here's what they're going to do. They're going to come out and they're going to raise interest rates by 25 basis points, which they're going to say that's to fight inflation. Let me tell you, 25 basis points is nothing. They could do that 20 times. 20 times. They could raise interest rates 20 times at 25 basis point per time. And what would we be at? We'd be at 5%. Well, what we got is inflation that they're admitting already. CPI is at 8%. The producer price index just came out. That's at 10%. And real inflation's running about 15 to 20%. So first of all, the 0.25% rate hike isn't going to do a thing. And it takes a year or two for these to even take effect against inflation. This is dangerous. What the Fed is doing is dangerous. Inflation is running away, and they're going to come out with the 0.25% rate hike. Now, maybe they're going to say something the market doesn't like. Maybe the market won't like that. But because we're having such a big up day tomorrow, I don't know. Maybe we'll get in a little bit of an extension from that, but I don't think we've hit the low yet. I think we're very close to a low, and yes, you might want to nibble at a few stocks here, down here, because I do think we're going to run up to a new high again. I think that they're going to print money and that we're going to run up to a new high. Okay, so let's move on. That's the stock market today. Big up day. Tomorrow's the exciting day. The Fed announcement. We'll see how that all plays out. Let's move on to the real estate market. Now, real estate is fascinating to me, especially right now. I mean, you got companies like Zillow. They've stopped their home buying program because, well, basically they lost billions of dollars buying homes and trying to flip them. Not an easy business, but they're doing more layoffs. Okay, now what's also doing more layoffs is the mortgage industry. There's this one company, it's called Better.com. Now they're the ones that I think I talked about them a while back when they laid off 900 employees over a Zoom call. Okay, well, they just laid off another 3,000 employees. 3,000 employees. Well, they didn't do it over Zoom. They didn't even tell them. They just included a severance paycheck with their regular paycheck and basically said, bye-bye, 3,000 employees. Look, this is a company that wants to go public. I don't think they're going to get there. We'll see what happens about that. But the mortgage industry is still laying off a lot of people. Now, why are they laying them off? Well, because interest rates for a mortgage are above 4% now. They're approaching 4.3%. Okay, 4.3%. Now, what this is doing is making homes unaffordable. Now, I'm in the camp that I think that home prices are going to have a 50% reduction. I think we're going to get a 50% pullback. Now, there's other people, Zillow will tell you that they're going to get a 23% rise this year. 23% rise this year. Now, I don't believe that. I don't buy that. I mean, you can do the numbers. I went over this before. Now, a lot of people cannot, they cannot qualify for a loan at the 4.3% for a fixed rate loan. So what are they doing? They're going back to their old ways of doing interest-only loans for 5 years. Now, you can pay interest only for 5 years, and then you have to either refinance or you have a big balloon payment. This is not going to end well, but they're going back to that. Now, I think that's just crazy. Personally, I think that's crazy, okay? That's just my opinion. But you can do the numbers on this. Okay, so last year a house that was selling for $1 million, 3% interest, right? Let's say it's interest only. Okay, that's $30,000 interest payment. All right. So this year that same $1 million house is now $1.2 million, but it's 4% now. 4% now. So what is that? The interest payment would jump up from $30,000 to $48,000 a year. Basically from, let's call it $3,000 a month to $4,800 a month. But let's say if it goes up 23% again, and that $1.2 million, well, it becomes $1.4 million. And let's say interest rates go up from 4% to 5%. So now you're at $1.4 million, 5% interest only, let's just call it, and you're paying $70,000 a year just on your interest. Did I do that right? Yeah, $70,000 a year. So you went from $30,000 to $48,000 to $70,000. Now, okay, now I don't think your income is increasing at these rates. Income's not increasing. This cannot continue on. Is the affordability factor. Okay, it makes it unaffordable. Now, why do I think mortgage rates are going up to 5%? Well, I think that because the Federal Reserve has officially stopped buying mortgage-backed securities. That's what they say. Officially, they're not buying them. But unofficially, I bet they're buying them still. That's just my opinion. But here's the other thing. Okay, so most mortgages the bank makes you a mortgage, and then they take that mortgage and they sell it to either what's called Fannie Mae or Freddie Mac. Okay, now Fannie Mae and Freddie Mac, these mortgages are then backed by the U.S. government. In other words, they're backed by me and you. They're backed by the taxpayer. Now, Fannie Mae and Freddie Mac just raised their limits to almost $1 million. In my area, they're raising the limit to $970,000 that you can get a mortgage that's backed by the U.S. government, basically the taxpayers, me and you. Now, I just find this funny, okay? So, yeah, we're not going to buy these mortgage-backed securities anymore, but we're going to raise Freddie Mac and Fannie Mae's limits to $1 million, and we're going to be the bag holder when they have the 50% off, when the mortgage, the whole real estate housing market collapse. Who's holding the bag? Well, it's me and you now, because these are government-backed mortgages that just got raised up to almost $1 million. Now, that's just crazy. Well, Mike, how do you know? How do you know that the real estate market's going to crash? Maybe it just keeps going from here. Look, I'm going to give you my number one way that I know real estate is going to crash. Here's my number one way. Okay, what is at a record high? Well, there's a lot of things at record high, prices and all that. But no. What's at a record high is the number of real estate agents that are in the business. There has never been more real estate agents in the United States in the business of selling homes. Just between 2020 and 2021, we added 195,000 agents. Okay, 195,000 agents, but that's not all. That's not all. The schools, the people going taking the classes to pass their real estate license, they're at record high also. So we got the number of agents at record high, the number of agents that are going to be flooding onto the market coming out of the real estate schools is at record high, and this is going to mark the top in the housing market. Now, I know that's not conventional thinking, but that is how it works. Everybody thinks real estate agents are making a ton of money. Look, I'm a real estate broker. I know so many agents out there that haven't sold a home in like 5 years. Look, in my area, there's probably 4,000 or 5,000 agents, and we probably get maybe 30 home sales a month in the cities I sell in. Now, granted, the Bay Area is bigger than that, but certain areas, I mean, there's not that much transactions turning over. Now, in other words, these agents that are all flooding onto the market thinking that they're going to get the easy money because real estate prices are at record high, there just isn't enough transactions for everybody. There's just not. Now, I've been doing this for years and years, so I have some past clients. They call me up, and I don't even advertise anymore. It's not a big deal to me. I'm a semi-retired guy, but I still like to get out there and be in the market, and I still sell homes, and people, I got a client, I got to go show a house to tomorrow. You know, she's actually trading down. Now, if some people trade up, she's actually trading down. Okay, but anyway, so she'll trade down and she'll buy a new one, sell that one. Yeah, I'll make a lot of money doing just that one transaction. Actually, it's two transactions. But most people coming into the real estate business, they don't have clients. They don't know how to get clients. It's not that easy to get clients out there. But anyways, that's how I know we're at a top in the real estate business. I mean, that's just a telltale sign when the number of agents is at a record high. When was the last time the number of agents was at a record high? Let's try 2007, right before the great financial crisis, right before the subprime crash. When the number of agents is at a record high, it is not a good time for real estate. That's a telltale sign that we're going to start going the other way. And I'm telling you, I'm looking for a 50% off sale. I could be wrong. That's just my opinion. Look, I could be wrong about the stock market. I actually like the stock market here. I think we're going to run up to touch the new record again. I think they're going to print that much money to push the market higher. I really do. I think they'll get some form of an infrastructure deal through or something that pumps up the market. They're going to continue to print the money. So I like the market here. I just would like to see a capitulation day, which is just wipes everyone out and people just throw in the towel and say, I don't want to be in the stock market anymore. That's the day to buy. Could it happen tomorrow with the Fed announcement? It could. It could. Well, I'm not sure it will. Maybe this is still going to play out for another week or two. I'm really looking at the level, the S&P. On the S&P 500 to get that down below 4,000. We just have the death cross. Everyone's all excited because we got the death cross in the S&P. It looks like it's going into a bear market. I don't think we're going into a bear market. I think this is a normal correction. When the crash comes, which should be later in the year, you're going to know it because it won't be normal. It will be straight down. Right now, we've had an orderly decline. Yeah, we're down 17% or so on the S&P. I think we could get down to 20% before we go and hit the new record high. That's just my opinion. Once again, I'm Tall Mike. I'm a stock market gambler. If you like this stuff, give me the thumbs out. Get out there. Have a great Tuesday, everybody, and we'll talk again real soon. Bye-bye now.